Hi, my name is Black Jeff. I am Black Jeff of Forex, and today I'll be talking about order flow. Now, when we talk about order flow, what are we simply talking about? We are simply talking about the storyline of the market. That's what I call it, right? I call it the storyline of the market. Now, what do I mean by the storyline of the market? What I mean by the storyline of the market is the current direction of the market, right? He said order flow. That is from the name order flow. That is, what is it currently flowing at? Like, what is happening currently? Like, what is the direction of the market? Now, when they say, when let's say for example, now we are using, let's say we have pipe, right? We have pipe. Now, in that pipe, there is this particular pipe that has elbow, right? Now, you notice that once the market gets to that point of the elbow, it diverts to the other side, right? So that is the flow has changed. That's simply what order flow in forex trading is talking about. Order flow in forex trading is simply talking about market direction. That is, what is the market going to do? What has the market been doing, and what is it going to do? That is simply what order flow is talking about. Now, there are two types of order flow, right? I'm going to get there. There are two types of order flow. We have the okay. Before I get it, let me not be too fast. Now, there are two types of order flow. Now, one of the type of order flow is called the continuation order flow. Now, what does the continuation order flow talk about? Continuation order flow simply talk about the market moving in the same direction with the trend of the market. Continuation order flow simply talk about the market moving in the same direction as that of the trend of the market. Now, what I am saying now, first thing first is before you get to order flow, one of the most important thing that must be in place is that your structure must be correct, right? Before you get to order flow, one of the most important thing is for your structure to be correct. Now, you must first of all know how to mark your structure. Now, I said in our last class or in one of the classes that marking your structure involves you marking your valid break of structure. I said it is a valid break of structure or the valid internals is the point where you trade from. Now, I said again that two most valid break of structure are the inducement and the disruption. The two most valid break of structure are your inducement and your disruption. Now, your inducement is the first valid break of structure after the market has gotten to its highest point. Now, let's use GBP USD as a case study. Now, do not forget where I said that the time frame that you use in marking your break of structure is the 1 hour time frame. The time frame you use in marking your valid break of structure is the 1 hour time frame. Now, the reason why you are using your 1 hour time frame is because 1 hour time frame is the intermediate time frame of the lower time frame and the higher time frame. Now, when we are talking about higher time frame, we are talking about monthly, weekly, daily, H4. Now, when we are talking about lower time frame, we are talking about 45 minutes, 30 minutes, 15 minutes, 5 minutes, 1 minute. These are lower time frame. Now, the intermediate of these time frames is the 1 hour time frame. Now, the reason why you are marking with the 1 hour time frame is because you don't want to be too what's it called? You don't want to be too close to what is happening in the market. Now, being too close to what is happening in the market talks about you trading from the smaller time frame. That's you scalping. Now, you don't want to be too far from the market. That is, you don't want to be waiting for long before the market can get to your value zone. right? You want to trade based on what the market is doing currently. And if you want to trade based on what the market is doing currently, the best time frame to do that is the intermediate time frame. Now, you've already know that 1 hour time frame is the time frame you use in marking your valid break of structure. Now, I said in one of the classes that when you come on charts, right, the very first thing you want to do, right, is to check what is the direction of the market. What is the direction of the market? What is the market doing? Now, you go on H1 time frame or H4 time frame, you want to check what is the direction of this market. Now, if you check carefully, you will see that the market has been moving in an uptrend. This is SAU-USD. Now, the market has been moving in an uptrend on 4 hours time frame. SAU-USD has been bullish based on what we are seeing currently. SAU-USD has been bullish, let's say from June, let's say from June 10th. Wow, 2024. Wow. It has SAU-USD has been bullish. We are looking at June 10th, or we are looking from the month of June 2024 to the current day, which is September what? September 18th, right? GBP USD has been bullish. Now, because you've seen that GBP USD have been bullish, you want to trade in line with the direction of the market. You don't want to be caught out. You want to trade in line with the direction of the market. Now, if you want to trade in line with the direction of the market, you want to first of all know the starting point of the trend and the ending point of the trend. Now, this is the starting point of the trend. Let's just start from here. This is the starting point of the trend. That's the starting point of the trend. And this is the end point of the trend. Now, based on what you can see that the current direction of this market is an uptrend. And you want to trade in line with this uptrend. After you've known this, the next thing you want to do is you want to go on H1 time frame. Now, you've already seen that your bias is showing that is an uptrend, right? You've seen from the H4 time that it is an uptrend, and you want to trade in line with the direction of the market. Now, when you go on H1 time frame, the next thing you want to look out for are the valid break of structure. Now, there is difference between a break of structure and a valid break of structure. There is difference between a break of structure and a valid break of structure. Now, break of structure have two criteria. One, for an uptrend, it must look like a V shape. It must look like a V shape for an uptrend. This is a break of structure here. While for a downtrend, it must look like an A shape. Look at, it's looking like an A shape. Now, the second criteria is that this part that is forming, that is moving up, should break the previous high point with the body of the candle. That is, here as the market you are tracing your break of structure, it should touch a body candle for it to be valid. Same with this guy here, it must touch the body candle for it to be valid. So this is what makes up a break of structure. Now, what makes up a valid break of structure is the same two criteria that makes a break of structure, but something must be added. The next that must be added is that there must be a structural liquidity. And your structural liquidity must be before the break of structure. And it must be at the right hand side of the break of structure. Now, this break of structure has two sides. It has the left hand side and it has the right hand side. Look at the V shape. Now, if you are dividing this V shape into two, which we are having here, if you are dividing this V shape into two, you will see that you have two sides. You have the left hand side and you have the right hand side. Now, your LCQ must be at the right hand side of the break of structure. That is for an uptrend and for a downtrend. If look at this guy, if you divide to 2 now, this guy is still the right hand side. So for an uptrend and for a downtrend, your structural liquidity must be at the right hand side and it must be before the break of structure. If it is after the break of structure, it is no longer valid. All right. Now I have already established that. The next place we want to get to is this. Having known how to mark the criteria for a valid break of structure, now I said that we want to know the highest point it got to. This was the highest point it got to. Now, because it has got to the highest point, remember we started from the bottom to the top. Now, when we want to mark out our valid break of structure, we want to check the, what's it called, the bottom of it, the end point of the trend. Is there a valid break of structure there? Yes, there is a valid break of structure there. Now let's check and see. Look at, this is a valid break of structure. This is a valid break of structure. So the first most recent valid break of structure is our inducement. This is our inducement. And the second most recent valid break of structure is our disruption. Here is our disruption. Now, you may be wondering, saying that, Black Jeff, why did you not take here as your second most valid break of structure? The reason why you cannot take here as your second most valid break of structure is this. When you mark your break of structure, from here, now, after marking your break of structure from here, right, it's touching the body of the candle. After marking your break of structure from here, if you trace it down, before this market is going to move up to break structure, this was the lowest point it got to before it moved up to go and break structure, right? So you are connecting the high of the break of structure to the low of the break of structure. So here automatically is your second most valid break of structure, which is called your disruption. Now, these are two valid points we take a buy or a sell from. These are two two important places, right? Two liquidity points we take a buy or a sell from. Now, taking a, because we are using an uptrend now, this is the same thing for a downtrend. Now, taking a buy from this inducement is risky. Taking a buy from this inducement is risky, but it is tradable. When we get to entry, I'm going to explain how to trade from an inducement. Taking a buy from your disruption is valid. I'm not saying that taking a buy from it is not valid though. It is valid. You can take a buy from here to the upside. But among these two, the one that has high probability, right, is the disruption. Disruption has very high probability of the market retracing from it. And I said that your disruption is the second most valid break of structure. Second valid break of structure is your disruption. Now, having known this, right, the next thing you want to be looking out for, right, is order flow of the market. Now, what does order flow of the market talk about? It's simply talking about the story of the market. That is, what is the market doing? What is the current direction of the market? What is the market doing? Where will the market buy from? Where is the next point the market will sell from or buy from? Right? Now, I said there are two types of order flow. Number one type of order flow is called the continuation order flow. Now, continuation order flow, let me take a box here and draw a POI, a point of interest. Continuation order flow, right, simply talk about, now, I told you something just now, that the most important place among the inducement and your disruption is the disruption. Disruption is what will determine the order flow of the market. Please write this down. Your disruption is what will determine the order flow of the market. Your disruption is what will determine the order flow of the market, not the inducement. Your disruption, I will come again, is what will determine the order flow of the market. What do I mean? Now, continuation order flow states that the market can get to your inducement and continue its buy to the upside. Remember, I told you guys something that you should trade in line with the direction of the market. You are trading in line with the direction of the market. You are trading in line with the direction of the market. Right? Now, continuation order flow say that the market can get to your disruption and continue the upward trend. This is continuation order flow. Or it can get to your disruption point of interest, right? But must not break the disruption low with the body of the candle. It must not break the disruption low with the body of the candle. It can break it with a wick, but it should not break it with the body of the candle. Continuation flow say that the market can get to your disruption, right? Or you should get to your disruption, but must not break the disruption low with the body of the candle. That is, it should not go below it with the body of the candle. It can go below it with a wick, but it should not go below it with the body of the candle. Then a continuation flow is set to happen. The market will continue to the upside. So this is what is referred to as the continuation order flow. Remember, I told you something here that it is the disruption that determine the order flow of the market. Now, for an inducement, the market can go below your inducement with the body of the candle before moving to the upside. It doesn't mean anything. The market can go below your inducement with the body of the candle before pushing to the upside. It does not really matter. But that should not happen in a disruption. For a continuation flow to happen, if the market gets to your disruption, which the market is currently coming to disruption now, states that the market should not break below your disruption low with the body of the candle, so that the continuation order flow can happen. So for a continuation order flow, the market will come to your disruption, but must not break below it with the body of the candle. It can break below it with a wick, but it must not break below it with the body of the candle. Then you will continue to push it to the upside. It will push the market to the upside. Now, it is called continuation order flow because the continuation of an uptrend is still happening, right? The market just got your disruption and is still continuing the uptrend. So this is what the continuation order flow is about. Now, the second type of order flow, this continuation order flow, I was the one that gave it the name, right? I'm not going to lie. I gave it the name continuation order flow to make my student understand faster and better. I was just teaching and the name just came. And I was like, continuation order flow. Now, if you are watching this video and you think I am giving you value free of charge, I would like you to subscribe to my YouTube channel. I would like you to like this post so that other forex traders can come online and see their posts and be interested to my to my channel, right? So my advice is this here: you can feel free to share my channel, right, on your status to your friends. I give premium value free of charge, right? Premium value, premium mentorship course free of charge online, right? So just one thing you should do is just make sure you subscribe to this YouTube channel, right? Turn on your notification bell so that anytime I drop a post, you will see it, right? And you will get value. Now, The purpose of this channel is to raise professional and profitable forex traders. That's the purpose of me creating a YouTube channel. All right, let's move on. The second type of order flow is called the change of flow order flow. Please write it down. The second type of order flow is called the change of flow order flow. The second type of order flow is called the change of flow order flow. What does the change of flow order flow mean? The change of flow order flow, remember the continuation order flow. For market to continue, the market should get to your disruption, but should not break past it with the body of the candle. But should not break past it with the body of the candle. It can break past it to the wick, it doesn't matter. But it should not break past it to the body of the candle. Now, change of flow is the opposite of continuation order flow. Continuation order flow says that the market will get your disruption and continue its upward direction. But change of flow simply means that if the market by any chance, like what is happening now, currently here, gets to your disruption. Remember I told you guys it is the disruption that determines the flow of the market. All right. Now, if it gets to your disruption and break past it with the body of the candle, it means that the flow of the market has changed internally from an uptrend to a downtrend. What do I mean that it has changed internally from an uptrend to a downtrend? It means that despite the fact that the overall trend of the market is an uptrend, temporarily the market will sell. I will come again. I said that if the market breaks below your disruption with the body of the candle, right, it means that the order flow of the market has changed internally. What do I mean by the order flow of the market has changed internally? I am simply talking about the order flow of the market has changed from the initial uptrend that we were seeing, right, to a downtrend temporarily. Remember, for the continuation order flow, the market just moved up like that. We'll just continue to move up, to just continue the upward direction. But for this change of flow order flow, the market breaks your disruption with the body of the candle. The market has changed direction internally or temporarily from an uptrend to a downtrend. That is, we will now be looking for opportunities to sell. Now, at what point are we going to be selling? Look at now. As the market, look at the market is forming break of structure to the downside. Are you seeing it? It is forming break of structure to the downside. Now, as it is moving to this downside, you will start looking for your inducement and your disruption of the downside trend. It was moving uptrend this way. Now, because the market has broken your disruption with the body of the candle, you will start looking for valid break of structure in the downside. Now, let's assume this is a valid break of structure. Let's just assume, because this is not a valid break of structure. This is just a break of structure. We're just assuming that this is a valid break of structure, and this one here is still a valid break of structure. Both are just break of structures, right? You already know what makes a valid break of structure. I told you there must be a structural liquidity, right? And it must break below it with the body of the candle. But in this case, I just want to assume that, for the purpose of learning, that this break of structure here is a valid break of structure, and this one here is also a valid break of structure. Now, after a disruption has been taken out with the body of the candle, I say you start looking for ways to sell. Now, at where will you be selling? You will be selling at the downtrend inducement or the downtrend disruption. That is, the market can get to this point here. It can get, okay, let me before I mark, let me just first of all do this. Automatically, here becomes our inducement for the downside, and here becomes our disruption for the downside. So, as market is moving down, let's say our disruption gets taken out, right? So, we'll be looking for ways to sell, and we'll be selling at that downtrend inducement and that downtrend disruption. So, we'll be expecting for the market to get to this inducement or this disruption and sell off to the downside. So this is what the change of flow is simply talking about. Let me just mark this guy for an inducement. You can get to this inducement and sell off, or it gets to your disruption and sell off. Any of these two. Remember that for a continuation order flow, the market got to your disruption, it did not break past into the body of the candle, and the market continued moving to the upside to just keep the buy continued. But because for the change of flow, order flow, the market got to your disruption and broke it with the body of the candle. Because it breaks with the body of the candle, your disruption, you will start marking your inducement and your disruption of the opposite direction. So this is what order flow is simply talking about. So in our next class, we'll be talking about entry. Although I have already talked about entry, right, using key level on my YouTube channel. I think that was the first video I uploaded. So if you've not watched the video on entry, you may have to go back and watch the video on entry, which is on key levels. So this is simply how market story happen, or market order flow happen. So this is the reason why some of you have been eating SL unnecessarily, because you do not know the correct direction of the market. Where will the market buy or sell from? Now, with what I have taught you now on order flow, you now know, okay, how to position for a buy or how to position for a sell, how to know if the trend will continue, how to know if the trend has changed. So this is what order flow is simply talking about. So do not forget to subscribe to my YouTube channel, right? Make sure you like my post, give a comment, right? And I promise you all to give premium content. I promise you all to give premium content. All right. See you in the next video. Bye for now.